Good morning, traders. We have a change in the risk levels for today, so important video this morning. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:14 a.m. Central Time, and I'm recording this in preparation for market day, March the 9th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive into the overnight action. I cut this a little early this morning, so just kind of be aware of that. But as of the time I cut this, all four of the broad market indices were essentially scratch. Crude oil was up about 0.3. The same thing for the euro, about 0.2 for the 30-year bond, and gold about the same. So really very little action over the weekend coming into this morning as of the time I cut this. And overseas action, China was up hefty, 1.89%. while Japan was down 0.95%. So quite a differential there between China and Japan in the Asian markets. In Europe, you have Germany and United Kingdom both relatively weak, with both of them down about half a point. In terms of macroeconomic reports for today in the U.S. markets, really nothing to speak about. There is one yellow flag report, nothing of significance. In terms of tomorrow, you have one orange JOLTS job openings, and that appears to be it. So relatively quiet for the start of this week on the macroeconomic reports. Obviously, Friday was a very ugly day if you are a bull. We had significant pop in volatility. Our short-term VIX popped up to a 14.31. You see, in terms of historical IV percentiles, they're all still relatively low. 3 of the 4 broad markets are still in the bottom third, with the Dow really kind of in the more middle of the range. But in terms of standard deviation moves, you can see 2 of the 4 markets, the S&P as well as the Dow, were up over 2 standard deviation moves, and the other 2 markets, the Russell and the NASDAQ, were somewhat less than 2. I believe they were around 1.7 if I remember the numbers correctly. So pretty significant move on Friday. The other thing about Friday's action is that it basically wiped out several previous daily candles. So clearly a change in market tone with Friday's action. So let's get into our daily report. Futures rollovers, no rollovers in our markets that we cover this week. We are still considered in a very bullish overall market tone with phase 3 higher highs and higher lows. However, that has certainly had a few more wrinkles come into it. The IBD status has changed. It's now uptrend under pressure, and the GMI index dropped a notch to 5 out of 6, with the buy signal being generated on January the 23rd. The active trader market posture is still very bullish, but again, a lot of warnings here with that big red candle on Friday. As such, portfolio long side posture is still at 100%, but you would be well served to be very cautious about initiating new positions right now. Probably more about lightening up some of your existing load, unless you have something that is really strong on the charts and breaking out with momentum and volume. Obviously, there's always a bull somewhere. From an active trader posture, it's still also measuring at the 100%, but you know, this can change literally in the next day or two, so we're kind of right there at that early warning level. One day outlook, very bullish. Oftentimes when you see a Friday big down day, that is followed within the next few days with a bit of a bounce. It'll be interesting to see just how much of a bounce we get out of this. Obviously, for the bulls to really be able to say that they are in control, they've got to be able to take this back. I suspect that we'll get a minor bounce and then more low action before we flush out a bottom to this recent action. You do have in the market posture in all four indices. We're still in the upper zone even after Friday's action. Still would all be considered very bullish, so don't overreact yet. And sometimes what can happen is that you get too bearish when the overall market tone is still very bullish. So be very, very careful. But yet, as I have it, threshold level 1, this is yellow. The same thing as hitting the brake lights. And you see those brake lights being tapped on the car in front of you coming into the intersection. You prepare to stop. That's what you should be doing at this point with this hedge warning status. Did review our monthly portfolio risk opinion over the weekend. It's still at the same level for recession indicators. Nothing really of elevated risk with respect to recession indicators or a all-out bear market. So still at suggest upside call hedge outside 2% out of the money on the call side and 3% on the put side, with a ratio of 5 calls to 4 put ratio. From a volatility-based warnings, we had a number of things flag on Friday. We did get a market in decline warning snap, and we also had a sharp increase warning come off on another metric. VIX obviously is trending up. You had a distribution day both on the S&P and the NASDAQ on Friday. Our count is back up to 4 and 3. Certainly, you know, on the edge. I mean, if we go to 5 and certainly go to 6 on the S&P on our distribution day count, that will see our warnings continue to increase and hedge risk levels increase. In terms of the new highs, new lows, obviously anything over 300 on new lows is a warning sign, and we're well over that with Friday. 578 new lows for the 1-month time period on the New York Stock Exchange. In the inter-market risk conversion indicators, we still have 5-to-1 risk on. Actually, I think it is 5-0. That should be a 0 there. And again, our overall market tone is still very bullish. Our option income strategies, the VIX is still inside the acceptable window for our option income strategies, though you'd be well served to be pretty cautious and perhaps reduce position sizing on anything that you initiate at this point. Covered call strategies, an equal distribution between in the money and out of the money strikes, certainly well called for in the current condition. And you may be setting up this week for some new put selling against your core portfolio basket of stocks that you are willing to own. So a number of opportunities may be presenting themselves depending on how the market behaves in the next few days. And in terms of our relative rotation graph, you see a lot of weakness has come in the recent weeks, with our biotech really being perhaps the strongest sector from this aspect. So kind of keep an eye on biotech, but biotech and perhaps the semiconductors, you know, the two industry groups of most interest if we start to get really, really bullish. In terms of point and figure, the change this week came in the financials, utilities. Obviously, this utilities is getting hit hard, and at the same time, financials are benefiting from an anticipation of rising rates. From market posture, a lot more red here than green, so a lot of damage. In fact, there is no green on the short or intermediate term market postures. So how quick we change from that all green to losing a lot of ground with that big red candle on Friday. If you look at the percent change within the sectors, you see it was really quite ugly. The best you could do was financials, but that was down 0.76. So remember, when things get really, really bearish, well, relative strength might tell you that financials are better than utilities, but you still lost money on the financials. So it is certainly a situation in bearish markets that all ships float out with the tide. On our industries, retail, railroads, internet, healthcare, transportation, followed by biotech, are the leading industry groups to keep an eye on for potential opportunities. As always, of course, we greatly appreciate you liking us on YouTube or your favorite social media platform. Send comments and the like into our email at support@falconglobaltraders.com. Additional information about other things that we do at Falcon Global, including our daily price guides for day traders on 16 key markets, including Apple and Amazon, and of course the 4 E-mini indexes. All are available, information about that off the website, as are the 3 live trading rooms. Disclaimers as always, hit the pause button if you need more time to review this. And then, of course, each and every day, we greatly appreciate each of you in the Falcon Global Trading community. Look forward to seeing you here tomorrow on our next market preview. Thank you.